Welcome to Morningstar. I'm Holly Black. With me is Nicholas Kammer. He's an equity analyst at Morningstar in Amsterdam. Hello.
Hi, Holly.
So, Nicholas, one trend we've seen this year particularly is people not using cash for payments anymore. We're shopping online, we're tapping our plastic contactless, and this means there's an opportunity. You're looking at merchant acquirer companies. What do they do?
Yeah, a merchant acquirer company is a payment facilitator for a merchant. So if we look at the payment value chain, they sit right between the merchant and a card network, typically a national debit or credit card, or you can think about international credit and debit card systems such as Visa and MasterCard. And what they really provide to the merchant is that they collect the payment, they connect to these networks, they process the payment, and they also offer some risk tools which enable the merchant to make sure that the shopper that comes to the shop, it could be either in the store or online, that the shopper is actually who they claim they are, to prevent any kind of fraudulent transaction occurring.
Okay, so that's what they do. How do they make money out of it?
They make money in a very simple way, is that they take a small fee, a small cut out of every transaction that runs through their system. And what is important here to remember for these names is that they typically set up one system to process these payments, and then the more merchants they can link to their own system, and basically the more transaction volume they can run over their system, the more money they make, because there's very incremental spending and very low incremental costs that these merchant acquirers have to lay out for each new volume or each incremental volume that flows over their system, which obviously also goes both ways and goes in the opposite side, in the opposite direction, as we have seen in the past few months.
Okay, so is this a growing space? What are the main drivers for these companies?
Yes, this is a growing space, and it's depending on which vertical you are in, or whether we are talking about in-store transactions being processed or e-commerce. There's a slight difference in the growth profile, but overall it's a very strong growing business. So if we think about the growth drivers behind the in-store payment processing, you have to think about the spending power of shoppers. How much do they go to the stores and spend, and then how do they choose to spend? Do they choose to pay with a traditional in the form of cash, or do they pull out their credit card or debit card, or maybe an e-wallet to pay for these transactions? In the e-commerce space, you have the general growth of the e-commerce market, and then also shoppers diverting from in-store purchases to e-commerce purchases.
Okay, so what stocks are you watching in this sector?
We are covering two merchant acquirers, Nexi and Adyen. And although both names are both merchant acquirers, they tackle different markets entirely in our view. So if we think about Adyen is a global merchant acquirer that primarily focuses on the e-commerce market, and drives the biggest value proposition is to very large merchants which operate on a global basis. A good example is, for example, a company like Spotify that needs to process payments from subscribers all over the world. Nexi, on the other hand, is an Italian pure play, so they operate primarily or solely in Italy, and there the market is a more in-store driven payment space where it's very cash heavy, and for them the growth driver is more the shift from cash transactions over to card transactions, which drives the growth for them.
Okay, so under Morningstar analysis, these companies do have economic moats. That means they've got barriers to competition. But what do their share price valuations look like?
Yeah, at the moment, we think that the valuations are a bit lofty, especially for Adyen. So Adyen trades in two-star territory. We do really like the company. There's not much to hate about their business model, their growth prospects, or their management, but the valuation is just difficult to get to. Nexi, on the other hand, is getting very close to our fair value estimates. The company has also a very good growth outlook, and we think the shares are becoming more and more interesting as they approach our fair value estimate.
Nicholas, thank you so much for your time. For Morningstar, I'm Holly Black.